Hi guys, in today's video we're going to go over how you can do a crypto arbitrage. This is a very interesting opportunity. A lot of people have been focusing on this, and in this video guys I'm gonna walk you through alongside Bart AI. So you will learn the basics and you can make your own decision. Is it something for you or probably it is not? So let's start from the basics. First thing, you wanna identify price discrepancies. Essentially, this means that if you see something that is overvalued or undervalued, you probably want to take a position with or against. You need to use tools or platforms to compare prices of the same cryptocurrencies across multiple exchanges. For example, sometimes the price might be one at exchange 1 and different in exchange 2. If you are able to execute your trade on exchange 1 and sell it on the exchange 2, this could simply mean that there is a chance for you to make an arbitrage play trade. The second thing is that you want to look for significant differences that present profit opportunities. For example, early in the days of Bitcoin, in some exchanges, Bitcoin was trading around 12,000, while on the bigger exchanges, it couldn't be found for under 15,000. So this is discrepancy of around $2,000-3,000 depending on the moment, right? And certain people took advantage of this. The second thing, after you identify the exchanges, the opportunities, and the price discrepancies, you want to focus on act swiftly, meaning that the crypto market move very fast, so time is crucial. You want to make sure that you have the capability to execute trades almost simultaneously. Okay, so you will be able to capitalize on the price differences. Otherwise, if you think too much, or otherwise if your internet is not so good, or the connection, or the actual broker is not reliable, you're not gonna be able, and you're not gonna only miss potentially the opportunity, but you might actually lose money. The third step is to focus on the common types of trades. So there are a couple of different types of arbitrage. We're gonna focus on three of them. The first one is exchange arbitrage. This means that you buy on the lower price exchange and sell on the higher price exchange, something that I gave an example earlier. The second example is the triangular arbitrage, which essentially means you exploit price differences between three different cryptocurrencies. This is something a little more complicated for advanced traders, I would think so. The third option is the cross-border arbitrage, which means that you're taking advantage of price variations across exchanges in different countries. For example, in Asia, Singapore, the price of Bitcoin could be one, and in the US could be different. And whatever price makes more sense for you, you can essentially try to play the arbitrage deal, buy low and sell high. Not a financial advice. The next step, of course, is to consider tools and automation. Manual arbitrage can be challenging due to the speed requirements, and you have to stay in front of the screen all the time. You simply cannot leave the trading desk. Many traders use specialized software of bots to automate the process, but again, this is another level. You're still a beginner. Just letting you know that this is something that exists, and this is something that some of them actually uses. Essential factors that determine are you going to be making money or you're going to be losing money, aside from your skills, of course. So first of all, the fees. You want to make sure that the exchange fees are reasonable and the withdrawal fees are not significant, because otherwise, if you're day trading and every time you have to pay fees for the actual conversion, then doesn't make sense for you probably using it. Then you want to make sure that the exchanges allow you to transfer at any time, any amounts. There's no restrictions, there's no issues with it. You also be aware of the risks, right? Arbitrage involves crazy risks due to the very high volatility of the cryptocurrency and the market overall. There could be technical glitches sometimes, and potential losses referring towards the glitches. Nothing is perfect. There is no system that couldn't get hacked or blocked. Just a couple of days ago, we heard that there was a major hack in XRP and over $100 million were stolen. So understand how this actually works. The last thing, of course, is legality. You want to make sure that you follow the regulations and the restrictions of the area that you're actually living, and everything is good and cool, and the exchange you're using actually has license to offer this services. So essentially, guys, this is it. You always want to make sure you learn more than other people. You spend more time researching than more time trading, because the core concepts are always knowing more, being ready for more, and essentially having greater opportunity in vast majority of chances to utilize these price discrepancies. For more videos like this, guys, subscribe and like this video.